to my computer. There we go. So today we're going to be talking about the first of, the most exciting topics of Leap In, which is starting to talk about finances. But we're going to ease into it because we're going to be talking just about setting financial goals. We're going to do a little bit of, financial literacy, just around 3 different financial statements. So for those of you in the audience who are well versed with finance and maybe, accountants, Abby, I'm thinking of you. This may be a big review for you, and feel free to chime in and add things because that would be great as well. But before we do that, before we get into this, I wanted to just have you guys take like 2 minutes, and I'm just going to put this in the chat. It's the link back to our Miro board. And I'm hoping that you guys could just share with us on the Miro board. You'll see a section there, which I'll show you in just a sec. You're just going to write one insight or accomplishment that you've had since the beginning of the program. And I also wanted to point out and thank you all for those who have been sharing resources in the Discord chats. That's awesome, sharing your insights. Love seeing those. And that's great that you guys keep adding resources for each other. I've started to add some more into FOL. Under the additional resources section, stuff that we're sharing out to you guys. You'll notice a new financial knowledge tab. There's a lot of stuff in there for you to check out in your own time as well. So click that link, and I'm just going to bring the Miro board up. Where did it go? There it is. So yeah, in here in this orange, you'll see like an, oh, whoops, I just moved it. Didn't want to do that. In this orange box here, just share an insight or an accomplishment that you've had in the last 2 weeks. Since you started Leap In, something around your business or something personally. So you're all I can see you all there. You're all too high, down to the left. May need to zoom out a bit. There you go, Brooke found it. Oh, someone's moving the board around. This is always really funny to watch. It's okay if it's messy. Don't worry about it.
How do you type in this? I'm so bad at this one.
There's a toolbar on the left side, just a text toolbar. You just literally click the text format and you can literally just start typing wherever you want. And then you can shrink it or grow it really easily. Oh, it's like someone, yeah, there you go. Just get rid of that shape. That's fine. Just put it under this heading here.
I'm sorry, I don't know what I'm doing.
It's kind of funny to watch.
I literally have no idea what's happening right now.
Can you see the screen, Ashley?
I can. Yeah, I can. I know. What is it?
You're way, yeah, okay, there should be a toolbar on your left right here.
Okay, so yeah.
And then you just click the T for text, or you click a sticky note, either or. If you click the sticky note, you just place it here where you want it, and then just start typing.
Ah, there we go.
The text will automatically adjust to the size of the sticky note.
I didn't get time to eat lunch today, so I'm eating while I'm watching all of you just zoom around on the screen. I'm having a great time. Thank you so much.
What are you eating, Kelsey?
Vegan fresh spring rolls.
Oh, delicious.
They are
from where?
From my kitchen.
Oh, amazing.
Even better.
Kelsey's a chef.
Something like that.
Basically.
I missed my calling. I should have been a chef. Ashley, I should come hang out with you more.
Yeah, I was gonna say, kind of rude you didn't invite me over.
Yeah, well, you know.
I have fresh banana bread out of the oven.
Oh, rude, you didn't invite me over.
Evity, are you having trouble? So, can you see you can see my screen, right? Okay, see this toolbar here? On the side, on my screen, yeah?
Yes.
Just click this sticky note, this one here.
Okay.
Click inside the box, and you should have a sticky note appear automatically.
Okay.
Yeah, now yours is smaller, so you can zoom in or zoom out. It's up to you, or you can drag it from the corners to make it larger or smaller.
Okay, there we go.
There you go. Is there anybody else that's still having trouble?
I don't see mine there.
I got Cecilia, you got new clients. That's amazing. Ashley got clear on her marketing message. Amazing. Steve says outsourcing and pay yourself. Love it. Tracy and Justin refined their company and have a more clear understanding of where they're headed. That sounds great. That's good. Thanks. We'll give you guys another minute or so. Looks like Brooke is just cruising around. Rachel, did you lose yours?
I see it on my screen, but I don't see it on your screen.
This program, I think they use this in like elementary school for kids on online learning. So
Come on, Dave.
Well, okay, we'll come back to it. Figure it out after, because we got to move on so we can stay caught up.
I'll have to practice.
If you need some help after, just let me know. It was more just to see what you guys are learning and what's happening. It sounds like good things. And we'd just love to kind of learn, from you guys as well. Okay, so now we're going to get into our marketing message exercise. You're not going to have to do it in front of all of us today, so you don't have to worry. So stress over, okay? So we're going to do it in groups of 3. You're going to just take turns sharing that 1-minute marketing message. If you've got it written out, share it with the other 2 through the chat. And then each group member just take some turns, providing constructive criticism and some feedback, either orally or written as well. We're going to give you guys about 15 minutes to do this, okay? So give me 1 second. I'm just going to turn on the breakout rooms. Okie dokie. It looks like Britt just got in here, which is great timing. Britt, once you're in here, give us a shout out.
Hi, I'm here.
Great to see you.
Yeah.
So we're just about to go into our marketing message exercise. And it looks like, so we're gonna have one group of 4 since we've got kind of an odd number of individuals today. I hope that's okay for you guys. So we're gonna do 15 minutes, Britt, and in groups of 3/4. You're gonna do your marketing message, your 1-minute marketing message. If you've got it written out, provide it to the group as well. That helps facilitate better feedback, and then just give each other feedback, constructive criticism. Maybe try practicing a different perspective or a different way to approach it, but be kind to each other with this as well, but also be real. So we're looking for good criticism here. Okay. I'm just going to change the timer here, and okay, any questions before we jump into this? Everyone's okay? Awesome. Okay, well, as Kelsey says, go to your rooms. Recording back on. Awesome. Okay. I hope you guys had a lively discussion. I hope there's some things learned and some good criticisms and some good feedback. Marketing message practice is going to continue on Thursday, but you're going to do it to the whole group again. And we'll be throwing a twist at you, which we'll tell you about tomorrow, something to kind of get a little bit of a different perspective. Okay, so I hope it's going well, and I hope they're changing and developing and growing. But as you could see on screen right now, we have a guest here with us, Erika Oakes. And Erika is a former Leap Junction advisor, one of the, I think you were around for the original Leap In program, were you not, Erika?
Yeah, I think I planned the first one.
Yes.
That was my ending task at Leap Junction.
So you were one of the founding mothers of Leap In. That's pretty awesome. For those who don't know Erika, she's also the co-founder of Awesome Oaks, which is a clothing brand for kids and their parents. She's also the founder of the Blushing Babe Society which is a pretty awesome group for women supporting women, which is, I think, I was trying to get a full understanding of it because I'm not in the group, but it's designed to celebrate and connect women leaders in the London area, if I'm correct, through events, right?
Yes, yeah, it was. I think that a lot has changed since the pandemic, so that probably will have a new. Sorry, I have my window open and there's some construction outside.
That's okay. That's okay. Well, guys, Erika is going to be here to chat with a bit about her story. We're going to talk a little bit about financial information, a bit around business success, and she's going to tell us what's been happening since COVID. But I will let Erika introduce herself and tell us her story because she will do a far better job than I can. So with that, Erika, take it away.
Thanks, David. Yeah, so you kind of, those are my two kind of businesses that I'm working on or had been working on. The Blushing Babe Society has kind of, as I said, kind of halted because we were completely event-based, and the whole point was to, I love social media and connecting with people on social media, but we were relying on that, and now obviously we heavily rely on that. So the goal of the Blushing Babe Society was to kind of bring connection in real life. So it's kind of paused right now because we can't do a lot of that. So that business is completely is just on pause. I felt that when the pandemic hit, personally, my capacity to handle the business and businesses could really only be focused on one. And obviously Austin Oaks being an online retailer was good to kind of focus on, and obviously we have a retail store, so it's clearly been affected by the pandemic, but something that we could easily pivot to cater to what's going on. So we actually do comfortable clothing, a lot of bamboo fabrics and matching kids and adult items. Everything's made in Toronto or in London or in Vancouver. So we're all completely Canadian based. And I'm very fortunate that we are not selling other items, like maybe high heels at this point, because people have been very interested in comfortable clothing. So we have been able to kind of keep that customer base and pivot to curbside pickup or other things that I guess altering the way things had been done, but obviously keeping us in business. So I started Austin Oaks about 5 years ago. We are celebrating our 5th anniversary in July. We started online, so that again was a nice bonus during the pandemic that we could have all of that already set up, because a lot of brick and mortar retail stores had to pivot and put everything online. So we were already all set up online. I started with all of this stuff in my basement, and we have now opened a retail store in Old East Village, and as recently in I think April last month, we just expanded into a warehouse, which I'm speaking out of right now. Actually, I'll just show you guys how much inventory we have. You can kind of see.
Wow.
So yeah, there's a lot. It's been great, a great growing experience, a learning experience, and yeah, I think it's again something I never really could predict, or even growing into this warehouse space, I didn't know if it was the right timing on anything because of the pandemic. But I think too, we just have to take the risk at some point and just say, yes, okay, I'm going to do it and commit and then keep going. So that's what I feel like I've been doing for the last 5 years. And it's just been this wild ride. But yeah, so that's a little bit about the business. My brother is also a founder. He is working from home at the moment. He actually has another job, so he's involved in the business, but I mainly lead in terms of operations and locations. And yeah, we have just hired, we have 4 new staff. So our team is growing. So it's been, yeah, interesting over the last year, but definitely positive in the scheme of things. So yeah. David, did you want me to start in on financial stuff? Like, what do you want me to talk about next?
Sure, yeah, if that's where you want to go, unless there's something else that you had in mind. But yeah, happy to jump in there and talk a little bit about your financial journey.
Yeah. So, I mean, is there still a financial incentive for Leap In? Is that still available?
There is, yeah. They
okay, good.
$5,000.
I wasn't sure. So yeah,
it's actually 50,000 now. Yeah.
Oh my gosh. Yeah,
just kidding. I'm just kidding.
Obviously taking advantage of these programs is so awesome because it gives you that little boost that you might need. So when I started my company, I had been saving up my money from working at Leap Junction, to be honest. So I had saved up, I think originally $10,000 was my original investment in the business. And my very first production run was $9,000. So I had $1,000 left over at the end. And I was super nervous about that. But the nice thing about a retail business is that if you can sell the product that's there, you see the return right away. So it's just a matter of having product in and having product out. So because that was working out okay at the start, we were able to kind of self-fund. So, we have about a 50% margin because we are a completely Canadian-made product. Most clothing businesses will have a much higher margin. And most people will tell you, you won't be able to run a successful business with such small margins. But I have been doing it and other businesses have been doing it Canadian made for a long time. There's a number of businesses in Toronto that have a very similar model to us, and it's doable. I would say it takes a little longer. And it takes a lot more planning. You don't see these big influxes in cash back into the company. Not the same that you might see if you have 75 to 80% margin. So yeah, it's taken a little bit more time to grow over the last 5 years with the production costs that we have, and of course within sales. But it's all about cash flow, of course, monitoring that money coming in, monitoring it going out, and then getting these little boosts here and there from programs like Leap. So I was able to be a part of the Western Accelerator program, which gave some funding. So that was a really good, again, little boost. I was able to use that money. I really planned what I was going to do with that money. I didn't want it to just go in the cycle of things. So my goal with that accelerator money was to incorporate the business, because of course that costs some money and legal fees. So that's what I did. Once we got that funding, I incorporated. I did all my copyrights and things that were I knew I needed to do, but I wasn't sure how I was going to come up with the money out of our production cost. Everything kind of already has a plan. So it was those little boosts that really helped. Some of those things that were kind of on the outlying edges of everything that I wanted to get done, but I wasn't necessarily able to do. And then in terms of funding for obviously production costs get a lot higher. Once you're producing our specific production, you have to produce 100 of one item in order to run it. So I am now producing a lot more. So 100 at the time was a lot. I'm like, how are we going to sell 100 pieces? Oh my gosh, I don't know. And then now we're up to in certain products, 500 to 600 per item. So again, it's all relative in terms of cash flow. Like, okay, are we going to sell this product? Did I order too much? So how am I going to balance that financial commitment to product with our sales? So, and then of course you have to factor in a ton of other things, marketing, employee wages, once you have, staff to hire on to help you, because eventually you're going to need to do that. But yeah, so it's still a balancing act to this day. And with, I want to say with, in terms of banking or like any financial institution that I've approached, it's been kind of, to be honest, a frustrating experience. They're not just handing out money to businesses, even though you can show them your numbers, or it's pretty hard. And I hadn't actually owed, and I was really proud of this, I hadn't actually owed anybody any money until the pandemic hit. And then we had to close the store, and it was just all of the planning that we had done the year before kind of just halts. So again, those products, we were able to pivot and really focus on our marketing online. But I was scared. So, taking those loans was our backup, and did again give us a boost. We did the 2 government subsidies that they were offering, government loans that they were offering, with the opportunity to get some of it forgiven. So I'm hoping that happens if I can pay everything back in time. But it's interesting to see what, especially the panic that I don't want to say panic, but as a business owner, you're kind of always panicking. Like, one of my revenue streams is gone. And so, I had to sell this product all only in one way when I was planning on selling it in multiple ways, because not only is the store gone, but all of our opportunity to connect with people at events, or, connect with do our like community involvement, where a lot of people start to learn about your business that way. You guys probably hadn't, I'm not sure if you have experienced it, but the little marketplaces that they do at the college, like those are great ways to make new customers and meet new people that might not necessarily find your brand. So when all of those are gone, it's been an interesting reflection on how I'm going to get this inventory sold. So the loans were kind of, although maybe I didn't necessarily need them at the time, I had to take them for my own peace of mind, because of course you have still rent payments and things that you're going to have to pay for. Those things didn't stop, unfortunately. And I can't really imagine what industries like restaurants and things are going through, because I've always at least had the opportunity to make some money through online. So, and a lot of, to be fair, a lot of people who were not originally customers online have pivoted, and we do have some older customers that weren't necessarily comfortable doing online, that we've kind of guided towards online shopping. So that's been good. Yeah. So anything else you wanted me to talk specifically about finances? I know I mentioned.
Yeah,
go ahead.
You mentioned a lot. Like, you sort of banging off a few questions that I definitely have. One thing I'm just curious to get insight on, did you feel like with the pandemic, did it feel in a lot of ways, having to readjust your business model, think about how you're going to lower costs? Did it feel like you were kind of starting over again in some ways? Work and research that you had to do?
I don't want to say starting over. I think because we had so much in place, like online was still, I would say, even in terms of it depended on the month in terms of our online versus our retail store sales, but online was still pretty much the predominant way we sold.
Right.
It was always about 60% online sales. However, I do want to say December, maybe it's because people were supporting local and we were open just before everything closed down again, but we did like 70 to 80% in store that month. Like, people were coming in and they were buying their Christmas gifts, and it was so awesome. We had the best month that we ever had in December. And that was really kind of, it shocks you a little bit, right? Because then you kind of think, oh, what could have been, I don't want to get in that headset all the time, but you think of like, what would this year have been if we'd been open and able to reach those customers who really just wanted to come in and connect with us. But yeah, so when we had to pivot, I would say it was personally for me, it was a little bit like not necessarily starting over, but just rethinking. My husband lost his job through all of this, so at the very start, I was scared because his financial contribution to our family was one of the only ways we could kind of afford for me to continue the business. So I was worried that I was going to have to close it. I was worried that I wouldn't be able to pay my staff that I had committed to. And yeah, there was some worries there. But I think because everybody was going through so much of the same thing, it couldn't be like, woe is me. This was like, hey, Erika, pick it up and figure it out because everybody else is going through this too. So that's basically kind of the mentality I had, and it's been exhausting. I'm not going to sugarcoat it. It's caused many sleepless nights and trying to figure out how to operate in a way that will still grow the company when you're at a lower capacity in terms of revenue streams. So I think it's just been a constant rethinking of new strategies. Even right now, like I was expecting to open May 25th. I really was. So again, it's just putting that on the back burner and figuring out, okay, well, we're going to have to do some major marketing online again, and figuring out some marketing, diverting some of that finance into marketing online in order to sell the product that we currently have. So adjusting those budgets, pushing it, I want to say in some ways, like I'm pretty not hesitant, but I'm conservative when it comes to certain expenses with the business. And I think that this has pushed me to kind of experiment in other marketing ventures that I wouldn't have necessarily experimented with before. So I think the only other thing as I was talking about this in the pandemic, the other thing I wanted to make note of was paying yourself. So actually, did you have a question about that, or did you want me to just?
No, you can go right into it.
Okay, because this has been my biggest struggle with the company. Is of course you value so many contributions from your team. Like I am so willing to pay other people to help me with my business, but when it comes to myself, I would always cut. I would say, okay, well, I won't pay myself this month because this needs to get done, or I won't pay myself this month because I have, this to do and more production here. And so the pandemic kind of, as much as it was scary, it opened my eyes that this is a business and it's not just like, I need to figure it out. I need to figure out how to make this fund my family, especially when my potential main source of income was gone. So I looked at, what governments were giving for CERB. And I was like, okay, I need my business to be able to pay me that. Like I used that as kind of my standard. And I'm like, I need my business to be able to pay me that. So I sat down with my bookkeeper and we figured it out. And it took that for me to just kind of open my eyes and be like, you can't just continually sacrifice your like my work too. Like I've put in 5 years here. And it was something that I needed to pay myself to realize that there was value in all of this work that I'd done. So I started with that, and in small increments every week. And a financial advisor gave me that advice once before, and I never took it, but they said, right at the start of your company, just start paying yourself just a little bit, like $50 every week, just a little bit to kind of give you that incentive to keep going. And then as you grow, you'll be able to do a little bit more, and it won't necessarily be this big shock to your payroll. All of a sudden, you're taking out like the most money out of all your staff it was just little increments. And that really helped me figure out that turned this in from like my passion project into my business, so that I would be paying myself to because I don't know about you guys, but I find that so hard because you put so much effort into to grow this company and to make these products, and you don't want to take it out and ruin everything. But in order for it to be successful, you need to do that, or else you're not going to feel like rewarded from this. So that's been a big struggle, and it's been a sore spot with me, my husband, sometimes, because he's like, can't you take some more money from the business? Like, can't you? Yeah. And again, like I said, it's just your baby. You don't want to screw anything up. So if I were to go back and do these last 5 years over, I would have started taking out a little bit more for myself earlier. But again, it was just, kind of fear, kind of, I didn't want to ruin anything that I had created. And I don't know, I was nervous about it. And of course, it's not easy to figure out payroll taxes and dividends and all of these complicated things that I'm not good at anyway. So I finally had this bookkeeper, and I was like, listen, I need to pay myself. What do I do? Like, how do I do this? And she helped me figure that out. But yeah, it's nerve-wracking to do that. Any other questions that you guys might have for that? Or
I think kind of building off that, I think you definitely hit some great points. Like the key, that is such a crucial thing I talk to a lot of entrepreneurs about, is the struggle to pay yourself combined with the struggle of knowing what you're worth is always tough. And that even if you eliminate all the complexities of payroll and all of that, just that getting over that mental hump of it is hard. But I think you nailed it there, Erika. It is important that you start considering that right from the beginning, these early days while you're in this program. How are you going to start paying yourself? What are you going to start paying yourself? How does that fit into your business model? Now, in there, you mentioned, the complexities of that. I'm curious to know, like in the early days, at the beginning of the company, and now I know you were with your brother, but how did the two of you prepare yourselves to, understand financial statements and information better? Was it a struggle in the beginning?
Oh my gosh, yes.
Like, so what did you do? How did you learn this?
Practice. I want to say getting used to, and something else that's really important for our business and any product-based businesses here will need to know this, is that I did set up right at the start a revolving line of credit at the bank, so that and that was something that was easier to get than loans or grants or anything like that. It was I think at the start they gave me like $10,000, and like it was almost like an overdraft. Because sometimes you need to go in the negative in order to get into the positive. And a lot of this cash flow is in and out, in and out, in and out. So that was really hard for me to wrap my head around. When I would see negative $8,000, I would think, oh my gosh, the company has we're like minus 8,000. How is that? That's not good. And then Kevin would say, well, yeah, but you have like 30,000, 40,000 in product right now that you just need to sell. So it's sometimes seeing those numbers can be really scary. But then when you look at the scheme of things and you look at like the bigger picture, that's really what you have to focus on. So even just I remember I got I forget, it was a production invoice for like, it was that original one for $8,000. And I was like, oh my gosh, $8,000. I'm just going to spend $8,000 on product. And I didn't realize the return that you would get on that investment. So especially anything product based, it's such an investment. And if you can build your brand in a way that people want to pay full price for that product, then it's a good investment. So all of the pieces that you have within your business relate to that product and relate to that investment that you put in. So I think that again, in terms of the finances, I hired a bookkeeper. I would probably say around the same time we incorporated, because again, it was just like, how do I figure out taxes now that I'm an incorporation? I need accountants. I need all of this, like as you said, these terms that I had no idea what they were, dividends, and I didn't know what that was. So that's when I looked to people who knew better than me, and that's investing in that is really, really important. Again, when you're looking at your finances and you're looking at what you have to pay out, like you pay accountants a lot for taxes, but in the end, if it's going to get done correctly and I'm going to have a good base of my business and know that I'm doing things right, then it's important to invest in. So actually met the bookkeeper that I work with now through Leap Junction. So
amazing.
Yeah. So I also find finances, and I'm talking very openly with you guys today. I don't normally talk about this openly, but
Thank you for being
kind of like airing your dirty laundry, right? Like, it's like, oh, I don't want to tell people, I don't want my business to sound like it's not doing well, or I don't want, like, if I'm having, a low cash flow, I don't want people to look at my numbers and be like, oh my gosh, you're doing so. But being honest and open, like, people that you hire, their job is to help you. And that was what I remember. This accountant said that to me. I was trying to figure out what a dividend was and how to pay myself at that point, and we were revisiting it. And he goes, listen, take what you want. It's my job to figure out how you can, pay the least amount of tax. And I was like, it was like a light bulb moment. And I was like, it is your job, and that's why I'm paying you. Oh, okay. So then it was something that I could, at the end of the day, it's my company. If I need the money and I need to take it out, and they can figure out how that works and how much tax you might have to pay on it or whatever at the end. But it's that was like a light bulb moment. It's like, oh yeah, I am paying you to figure this out. This is your role, and this is why I'm investing in a professional here. So yeah, I don't know if I veered off your question.
No, that was great. That was great. Thank you. And thank you for being vulnerable with us. Like, we appreciate your honesty and your candor in that. I think, well, I see Josh's hands up, and I have some more questions, but in time, I'd rather let the audience ask some questions because they're the ones that are here to hear from you. So Josh, go ahead.
Did you hire a bookkeeper specific to your industry? Like, how did you get those variables, like what amount of inventory you would expect not to sell, or if you had anything like that? Like there's a lot of variables specific to my industry that are just a wild guess, and I have no idea how to learn more about that.
I would say I still do a lot of wild guessing.
Yeah.
I'm not gonna lie about that. Yeah, especially with the pandemic, like what we're ordering right now, I'm like, I hope we can sell it. Sometimes I'm like,
Uh-oh. Shoot.
really great. Oh no, I invested. But at the end of the day, if you can make some money off of it, and my bookkeeper always looks at it as money on the shelf is still product, and it is still an asset. So like, don't worry. Our program, what program do you use? I'm sorry, we use the Shopify platform. Are you product based?
I'm actually service based and switching to kind of like a subscription based model, but a little bit of a variant on that.
Yeah, I mean, that's also something that I have the advantage of having a platform through something like Shopify. Do you guys use Shopify? Does anybody use Shopify here? Yes.
Yeah, a few people do.
Okay. Okay. It's great because my bookkeeper, who actually she wasn't specific to my industry. She did do retail stores. She hadn't done a lot of online stores. So she was familiar with the retail industry, but she wasn't necessarily familiar with the online, our online platform. So I was really lucky that our Shopify platform is so user friendly. So she can go in there and see the payouts and any returns that we've had, or what types of payments we were accepting, whether it was through our POS system or through our online. Everything was gathered through this one point of sale or back end system. So that was really helpful when we got started, because it wasn't a ton of different spreadsheets. It was kind of all in one spot, and our Shopify platform was really easily like easily integrates with programs like QuickBooks. Have you guys used QuickBooks before?
Yeah, that's what I'm using right now. And I have to use a lot of API stuff to connect it because it doesn't integrate very easily.
Yes, I know. So that was the one benefit I had with Shopify, that it integrated with that. So it was, again, like I started doing QuickBooks on my own, and then I realized that I didn't know quite enough about using QuickBooks to really use it to the capacity that it was able to be used. So that's why when I did hire a bookkeeper, she was familiar with QuickBooks, she was familiar with retail, and I felt like it was a good fit.
And did she go over a full financial projection sheet with you?
No, so something that is really interesting.
And this will be my last question, sorry.
Yeah,
There's a lineup.
It's funny because projections are a funny thing. I should do more projections. When I did the accelerator at Western, one of my goals was to work with another business that was in there, that to figure out a simplistic way to do projections. And I never did it. It never really developed the way I wanted to. So I had to approach my bookkeeper many times. And she basically said, my job and something that I like doing is the day-to-day. So the overall big scheme of things, the big projections, that's not really the job of a bookkeeper. And don't get me wrong, I've thought about investing in somebody to do that for me and to really come up with a better formula for that. But I haven't really found it yet. So I had some advisors suggest to use business students to do that for me, and just kind of try out a couple and see if they came up with something that I liked. But yeah, I haven't nailed that one yet.
Yeah, that seems to be a pretty consistent open end for a lot of people. There's a lot of intuition that goes into projections.
Yes, and variables, right? Like, who could have predicted that there would be a pandemic? Like, you'd like,
exactly.
Oh my gosh.
Yeah.
And even within this pandemic, there's been variables. Like, I thought we would for sure be open by now. Like, I really, in my heart, I was thinking so positively, and
it's hard to use historical data for a pandemic.
Josh, it sounds to me like what you might need at this stage is to do some benchmarking. Now, do you know what benchmarking is?
I know the term generally.
So benchmarking from a financial perspective is when you're able to gather data from a company that looks most like yours and use their financial ratios to help predict your projections. It's what we do in lieu of when we have no information, right? So there are specific tools out there for all sorts of industries for benchmarking to help you come up with those initial projections. If you're super niche and super unique, odds are you might not find exactly what you're looking for, but you may be able to find something that looks like it. I've added some financial benchmarking tools to FOL under the financial knowledge part. It's right at the top in the description. There's also a book in there that you can check out. Like, you really want to get into this and learn it. There's like a yearly textbook that comes out for businesses in North America. It's all about doing financial projections and benchmarking. It's about $100 for the book though. And you got to be kind of into wanting to learn more advanced finance, but it's there nonetheless. But of course, having a financial advisor is always helpful too, a financial advisor to help with those projections as well. But if you want to talk, go ahead.
I'm just gonna add in there, it's like, after you get into your first year of business too, you can really start to feel, okay, what months, like for us, the summer months are usually not great for our sales. So I've learned that in terms of budgeting, in terms of like that, those months are something that I need to focus on different things, more marketing in this area, or maybe shows or events, or but like knowing November and December are coming gives me some sort of like confidence in, okay, people will buy for Christmas. They will. So it's just, once you get your first year, 6 months under your belt and you start to realize what a good month is and what a bad month is, or not necessarily a bad month. I don't even like calling them bad months because it's not bad. You're still selling. It's just, maybe lower revenue generating than other months. And there are, again, like so many variables for that. So once you get a little bit more time under your belt, you'll be able to get a better handle on, what that looks like in the future.
Yeah, that's true. Well, thank you for taking the time.
All right, we have time for one more question. Evity, if it's a quick one.
I'll try. I wanted to know more about your relationship with money and have you always been financially literate? And then as money starts coming in, has that affected your ability to raise prices, to ask for more, and stuff like that? Like, how has your relationship with money affected your business?
Totally. I think that at the start, and everybody feels like this, it's like you do your first couple of sales and you're like, oh my gosh, somebody just bought something from me. Like they actually paid money for my product, or they actually bought something and they see value in it. And so that took a little time because sometimes you undervalue yourself, and so many entrepreneurs undervalue themselves because they don't think that what they've made or what they're doing, especially in services, is worth the money. But that does get a little bit easier because, again, you look at the market and what exists in the market. And I tried, when I launched this business, to price it very fairly. I didn't try to oversell it. I didn't try to undersell it. I went quite in the middle, and I just based that on comparables. But now that I do know my product, there is sometimes where I'm like, you know what, this is a great product. People are really loving this. Maybe we can boost it a little bit more. And so as your brand develops and the value behind your brand develops and the trust in your brand develops, you can raise those prices. And I think that right now, a really great benefit, well, not benefit, but something good out of this pandemic was that I did produce everything locally. So when borders were shut down and delays were happening, if worst case scenario, I could drive to Toronto and get my stuff. So that was really something that was beneficial. And I think people started to see that value. Like when we opened up, I forget when it was, last summer maybe, and HomeSense had nothing. Do you guys remember that? And everybody went to HomeSense and Winners and the shelves were empty. I was showing my store. I'm like, come here, I have lots of stuff. I got lots of items because I just went and picked everything up from Toronto. So it was that people saw value in that, and they saw value in the Canadian made, and that takes connecting with the right consumer too, like the right customer, because not everybody's going to see value in your business, and that's okay. Like some people don't like a higher quality children's item, and they prefer to shop for something more affordable. But for me, the quality and the value and the Canadian made, that means something. And so as long as I'm connecting with those customers that also see value in that, that's what I really try to focus on. And then of course, that kind of builds you up a little bit, because when you can find those customers that see the value in you, then it gives you more confidence in what you're selling. Yeah. I think, did that answer your question? I mean, my relationship with money has always been, I was worrisome. Like I was scared of it sometimes, scared to spend it not when I'm spending my own money, I go shopping and spend it on what, but when it came to the business, I was very scared to spend it because I wanted to see a return or some sort of value within that. And I think that as you get used to money in, money out, like I said, your cash flow, what your expenses are, what you can predict, what you're going to make, all of that can help ease that and get you a little bit more comfortable. But, yeah.
Thank you.
Great question, Evity. Awesome. Well, thank you so much, Erika, for joining us today. I think it was really awesome to see, what's been happening with you over the past year, and I appreciate you for sharing what's been happening in an honest way. I know that as we head into kind of this financial section of Leap In, there's definitely some anxieties over understanding not just finances, but like what financial success actually looks like in reality.
Mhm.
Thank you for sharing that with us. I really appreciate it. I hope you guys learned a lot, and definitely make sure you're following Austin Oaks on Instagram, guys. You know, don't be afraid to do a shameless plug here, Erica.
Oh yeah, you can check us out, and if you're in search for very comfortable Canadian made clothing, you can shop our website.
Awesome. Thank you so much for taking the time.
I see some customers. I see some, yeah, Ashley, I like recognize that name from some orders.
Amazing, amazing. So she can be an advocate here and tell you guys how great Erica's clothing is.
Well, thank you so much for having me.
You're welcome. Good luck with the rest of the year. I hope everything goes well, and hopefully when things open back up, you know, we'll be back on the trail to doing some events, and maybe some of us will be able to attend them, which would be awesome. Thank you, Erica. Have a great rest of your day.
Guys, thanks
Thank
for
you,
having me.
Erica. We appreciate you.
Okay, any other questions before we jump back in? We are good. Okay, Kelsey has left us, so if you need something from Kelsey, she may pop back in after, but you can always hit her up on Discord too. Okay, so for the rest of today, we're going to be talking a little bit around financial goals. We're going to talk more about some financial statements, and we're going to do some exercises together. So this whole module, if you've done your reading already, this will conclude kind of the business analysis portion of the program that we're going through. So after completing this module, you know, you should have been able to identify personal financial goals that you're going to actually test throughout the remainder of the program that helps to determine your current financial feasibility in your business. In addition, you'll have considered your startup costs if you haven't already, and you know, go back and look at potential future funding sources for now, for startup, and for growth. You know, having evaluated your fit already as an entrepreneur in module 1 in the beginning week, as well as assessing the market, which we did in market research. And I know, you know, we're squeezing a lot of this in, so you're probably not completed on your market research. That's okay. We're just going to introduce a lot of these topics, and you're going to get time after to kind of go back and revisit some of this. But this financial step in this module provides you with the information needed to finalize your business concept and begin the business planning process. So some of the key outcomes of this session here are around personal financial goals, developing them, estimating your startup costs, creating a schedule of potential funding sources, and then also understanding key financial concepts and terminology, as well as evaluating your business concept statement, again, against all of this data. So I'm just curious, I want to ask you guys here, when you hear that a business is financially successful, what actually comes to mind? Anyway, what does that mean to you?
Profiting.
Yep. Definitely, profits. Anything else?
Your corporate company being able to pay dividends to shareholders.
Dividends, key, definitely.
Being able to
One that
grow.
Erika talked about that she forgot about for the last 5 years.
Paying herself.
Right, personal income. That one is key, I would think, right? Okay. How important is financial success to all of you? Like, what does it mean? Let's have a volunteer. Tracy, you had your hand up? You're the only one I can see right now. Let me see.
Really important.
What does it actually mean? What does financial success actually mean to you in your business though?
For our business specifically would be like being able to sustain our family, and we are hoping to have employees in the future and be able to have them have a great life and livelihood on the same, like at the same time. And then like the reason why it's important to us is like it's our security for the future. Like we don't really want to be like living in a box when we're 65, and like, we want to be able to have stuff in our life for the future. So yeah.
Thank you for sharing, Tracy. Does anybody else want to share what financial success means to them in their business? No? That's okay. How about What are you willing to risk?
Ebony just put a comment.
Oh, she did? Oh, I can't see everything. Let me just move my
Does create an impact that I am in this for myself and my community.
So for Ebony, it's more about impact, which makes sense because Ebony's starting this from a social enterprise perspective, right? So for her, it's more about that impact you're going to create. For Tracy, it's about her family and the life they're going to create around it. Is anyone willing to be vulnerable enough to tell me what you're willing to risk to make sure this business is a success? Just curious.
We're like risking everything right now.
So you're putting it all on the line for this.
Yeah. Like Justin has a really good paying job and we're looking at him quitting. So it's really terrifying.
I can imagine that's a brave leap to do that, right?
I was going to say risking time, energy, and freedom, because I would rather, for me personally with my business, I would rather work like most people won't, so I can live like most people won't in the long run.
That's a great way to put it, Abby.
Thank you.
For myself, I'm thinking I'm willing to like change how I see things and do things and mindsets and stuff to be able to operate properly as a business instead of just this being a hobby.
And that's a tough spot for a lot of people, right? Is being able to do that transition. It can be tough, definitely. Well, thank you everybody for sharing. Now, I want to state some key things here. You know, as we're heading into understanding more about our financial concepts, we need to make sure that we're assessing this key information because it is critical to evaluating whether or not you have a hobby or whether you have a business, whether you can grow and support your family or whether, you know, you need to make a change to actually get to that goal. You know, a business is only a success if it actually helps you reach your personal, professional, and financial goals. So some time and effort is going to be required to understand and assess financial aspects of your business. It's something you're kind of always doing on an ongoing basis. We'll just skip past that. So the first topic we're going to get into here is determining your financial feasibility. So how do you actually test for feasibility of your current state of your business? So at the end of this module, you want to ask yourself 3 questions about your business to test its feasibility. First one is, does my business match my personal vision? Where we want to go, what kind of life we want to have. Second question is, does my business meet a perceived need in the market? That's what you're doing through your market research. The last one is, will my business be profitable? And that's what we're going to, you know, start getting into today. Many entrepreneurs, you know, they start businesses that only pass 2 of the 3 feasibility questions. Then they wonder why they were unsuccessful or maybe dissatisfied with their venture. If you want to start a restaurant, for example, you may be able to prove a market exists. I've been in the restaurant industry for a long time. Very risky. You can prove the market exists, of course, and you could probably prove that the restaurant will be profitable. But if the proposed business does not match your personal vision, because I'll tell you, time demands in the restaurant industry as the owner, unless you're, you know, getting into a large franchise and you got a huge backer, time demands are crazy. So if that's not a personal vision match for you, it's not going to be a success for you. Similarly, if you establish a business that matches your personal vision and your life vision, meets a particular need in the market, but it does not pass the financial test, of course, it will not be successful. Too often, I find entrepreneurs, they discontinue their feasibility analysis when information is just hard to find. And determining financial feasibility can be difficult. Sometimes finding the information actually requires a ton of effort. Other times, the process of establishing financial feasibility, you know, can just seem daunting. You might have anxiety over it, right? But perseverance at this stage in the process will help you build a successful business and help you meet your own personal financial goals. So you have to ask yourself the question, how much is success worth to you? If it's worth everything, like Tracy is saying, they're putting it all on the line, then you want to avoid failure at all costs. So you need to make sure you spend time testing the financial feasibility of the current business model that you're in. Now, in order to understand if your business will be profitable, we have to screen for this feasibility. So just think, when you decide you want to visit a new vacation spot, in a non-COVID world when we're going on vacations, Do you just jump into your car or jump on the plane and just go there? Obviously not. First, you learn about the costs of the visit, how long, how far, how much. Look at your bank balance and your work schedule, and then you make some decisions about where you're going to go, how far away it is, and how much it's going to cost. In the same way, you should plan ahead, research, and evaluate your business, even if you've already started. However, before screening for this financial feasibility, it is important to first establish what your personal financial goals are. And you also need to have a basic understanding of the financial language of business, both of which are covered in the readings for this module. So if you haven't taken a look at the readings for today, please go back. So reality check on page 87, the personal goals worksheet, is definitely something that you're going to want to go through and check out. You're also going to need to learn the basic financial concepts or the financial language of business. This is covered in the balance sheet, the income statement, and the cash flow report introductions, page 88 to 92. And then I've already mentioned I put additional resources on FOL around increasing your financial literacy. It's not just knowledge on there. There's also a bunch of helpful tools and other individuals, accountants, bookkeepers that you might be able to get in touch with to help you with some of the questions that are a bit beyond us because we are not financial experts. Also, I'm just realizing, there we go. Okay, sorry. Couldn't see my screen for a second. If I glitch out, guys, I apologize. My internet is a little spotty today. So why is it important for us to establish personal financial goals before starting or building in your business? Why we do this is because setting financial goals and evaluating our business against them is, well, the first step in actually achieving those goals. These goals are important because they are the foundation you will use to test the business concept for financial feasibility throughout the rest of this program. Testing for adequate profitability prior to starting the business helps ensure that the business is generating enough money to meet your personal financial goals. Your business must be profitable enough to cover its own expense and still pay you a salary, even if it's, as Erika said, $50 a month. You should be considering that right from the beginning. Achieving your personal financial goals is going to require you to focus on the financial health of your business. So the reality check in the manual on page 87, personal goals worksheet, this helps you go through and actually establish what some of those personal financial goals and business profit needs that need to be met that you might have. So please take the time to go through this in your own time and answer these questions and fill it in. Now, as you explore your business concept to determine its financial feasibility, we need to also investigate three components: startup costs, profitability, and cash flow. Startup costs, these help you determine how much money you need to get your venture off the ground. They also, if you're in the early stages of growth, this is other things that you can put in there for those of you who have already started your business. It's getting you to that next level. Profitability, this gauges whether the concept is actually profitable or at least has a profitable future. And then cash flow. Cash flow is about understanding the cash flow needs of the venture and the funding sources identified to meet those needs. And in modules 9 and 10, later in the program, I think as we get to towards the end of June, we'll cover profitability and cash flow in much more detail. And this will be during the business planning phase of the program. Now, I know learning and understanding your business financials, it may be easier to some than others in this group. And there may be a few of you right now that are feeling a bit worried or maybe even a bit anxious, but these concepts are not as complex as you may think. Everyone has had some level of experience analyzing financial information and planning financial strategies at some point in their life. For example, have you ever estimated the costs of going on a vacation prior to walking out the door with suitcase in hand? Well, anybody raise your hand if you've done that. Right? Of course. It seems pretty simple. Well, then you've had an experience similar to estimating startup costs. Okay, how many people here have ever tried to figure out the difference between gross income on your paycheck and the net amount that puts cash in your pocket? Anybody? No one's ever done that? Looked at their paycheck, try to figure out how much? Okay, excellent. Well, then you've had experience analyzing profitability. Last one. Have you ever made a decision to purchase something with a credit card rather than cash so you could have more time to pay for it? Do that all the time. Yes. And if you're not building credit now in your business, you definitely should be, especially if you're planning on getting investment in the future. Credit score is important, guys. So if you've done that, well, congratulations. You've had experience with managing cash flow also. Now, some of you may not have much experience or be comfortable with reading and projecting financial statements, and that's okay. Practice, as Erika said, makes perfect. And it's important to practice because the only way to test for financial feasibility is by determining the profitability and cash flow of your business. The more comfortable you are with financial concepts, the more accurate your projections will be, and the easier you will be able to make sound decisions in your business. Sorry, I'm just getting a message here. Even Abby is saying that she's nervous about this and she's an accounting major. So yeah, I can definitely understand that, Abby. And if you guys need someone to vent to and talk to, you know, the LEAP staff is here to help with that anxiety as well. Okay, so we're going to introduce the beginning of our financial concepts here. So to introduce kind of the importance of understanding and utilizing financial information, I want to go briefly over the financial statements that are presented in this chapter of the Entrepreneur Manual. Since one of the key questions we're asking ourselves at this point is, will my business be profitable? It is important to know how to calculate profitability. And the income statement is key in calculating your company's profitability. The income statement shows the net income or loss your business has experienced over a period of time. It is your company's financial grade card. The time period could be a day, could be a week, could be a month, could be a quarter, or could be a year. The one we're seeing here is a year. So a year-end statement from a company called Backyard Solutions. This report helps you determine if your business is making or losing money. The income statement displays the revenue or sales earned by your company and the expenses that occurred to generate those actual revenues. Then it records net income based on those revenues and expenses for the intended period of time. So the main components of profitability that we see here on the income statement are sales, okay? Sales right here, cost of goods sold here, and your operating expenses. Together, these components help to create your company's net income or its bottom line, which tells the profitability of the company. So here in the pic, we have a quick summary of Backyard Solutions. So we see that they had a net sale of almost, $775,000. 775,000. To generate those sales, it cost them just over $542,000, which leaves them with a gross income of $232,552. So their total operating expenses, so all the other expenses they incurred were, just under $200,000, leaving them with an operating income of $61,182. Obviously, there was other expenses incurred. We can go into detail. You can actually go into detail around what other income here is. Interest and other things get applied there, leaving them with a year-end net income after sales of $775,000 of $57,705. So that's the bottom line at their year-end of what they made. So the net income figure of $57,705 represents 1 year of profits for this company, which will then be added to the equity in the retained earnings account on the balance sheet, which we look at next. So the balance sheet, also very important, it reports what the company owns, what it owes, and the net worth that remains for the owners of the business. These classifications are broken down into the following categories: assets, liabilities, and owner's equity. The formula in which these categories are used is assets are equal to liabilities plus equity, hence the balance that you see there in the pic. In spite of all the information it reports, the balance sheet does not provide details about the financial performance of your business or its profitability. This information is reported in the income statement, but they are connected. One account in equity that seems to stump everybody, especially new business owners in their first year of business, is called retained earnings that you see here. If you notice, it's 57,705, which we saw on the income statement. So if we looked at the retained earnings here, 57,705, which we calculate on the income statement, this represents the amount of earnings or net income that has not been paid out to owners in dividends or owners draw yet. Because this company is only 1 year old, which many of you will be in the same position, the retained earnings account matches the first year's profits as shown on the income statement, okay? In subsequent years, retained earnings will include cumulative net income or loss with less any payments that are actually going out to the owners. So right now, owners aren't taking any payments at the moment, okay? Another item that's very important to pay attention to is also the cash account on the balance sheet up here. It is important, or sorry, that is the most important account, and so important that we actually make a statement just to manage this cash, which is what we call the cash flow report. So the monthly cash flow report is one of the most important planning and reporting tools that you will use during the startup phases of your business. On the cash flow report, we record every entry into your business and cash payment out of the business on a monthly basis. These inflows and outflows, as Erika was saying, cash in, cash out, are grouped by categories that will affect the other financial statements, such as equity contributions, inventory purchases, or operating expenses. The cash flow report lists the sources of cash you expect to receive on a monthly basis. This list includes cash sales, collections from accounts receivable, equity contributions from owners, and loans from other owners or your outside sources. The cash you expect to receive is added to the cash balance remaining from the prior month to the total cash available for that month. The last line on the cash flow report that you see here is the most important because it reports the cash balance after all monthly cash has been received and paid out, okay? Having an understanding of these three financial statements, income statement, cash flow report, and balance sheet, will provide you with the financial information you need to make successful financial decisions, okay? So definitely go back and read through the manual if you haven't done so, go over those statements in a bit more detail, and then on FOL, don't forget to check out, there's actually a game on there from the BDC I put on there that helps you with financial literacy. It's like gamified version of learning accounting and bookkeeping. It's kind of funny. You gotta add money to your bank and all these kind of silly things, but there's tons of resources there. There's also an entire another lecture from Leap In last year that goes through each statement in detail. I posted the video there. It's very helpful. It's from two financial advisors that work for Small Business Center London, Phil and John. So that video is there to help you as well when you need it. And then these are the links I posted, Josh, that I mentioned. These are for financial benchmarking. This link here, Industry Benchmarks from BDC. This is that almanac book I told you about here. And then these are the industry norms. If you're looking for ratios, like for your industry to try to understand what's typical ratios and margins that these types of my types of companies make, that's where you're going to go. RMA would be very similar to. It does. They do annual statement studies for all sorts of different companies as well. So don't be afraid to check those out. Okay, let me just fix my timer here to make sure we're staying on track. Okay, so now we're talking a little bit about startup costs. Whoops, let's move my chat over here. So before you start, you need to have some idea of what costs you will incur before you even make your first sale. Identifying startup costs for a venture helps you know the amount of money needed prior to opening your doors for business. So what we're going to do now, we're going to go to page 85 here, and there is a little reading about Danny O'Neill. He's the owner of the Rotisserie. If you guys did your reading, you will remember it, but I'm going to give you 2 minutes to jump into page 85 and just kind of refresh your memory on that and take a quick peek at the write-up about his business, okay? So yeah, take about 2 minutes and go through it. I was going to ask you some questions about it. And I'm gonna also post the link to my slides in the chat in just a second. Okay, was that enough time for you guys? Just do a little thumbs up if you're good. Physical or emoji. Cool. Everyone's good? Awesome. Okay, so quick question. How do you think Danny O'Neill identified specific startup costs? Looking for someone to volunteer an answer here. What did he do to help figure out what it was going to cost to start that business? Anybody? No? I will help you. Well, he did field research, right? He was a coffee bean picker in Costa Rica. He went and actually, went to the industry on the inside, learned more about what it actually takes to get on that side of the distribution chain. He talked with friends. He met with small business consultants. He researched his industry. He talked with city inspectors. And of course, he talked with, competitors' customers. Startup costs need to be researched carefully and projected accurately to be of any value, okay? So even if you're already in business, but you're still early, it might be a good idea if you're thinking of more growth to go back and look and make sure that these projections are correct. This information is what you're going to gather through just more research, talking to other entrepreneurs, talking to vendors, talking to advisors. Okay, second question. What was the benefit to Danny of having done these carefully estimated startup costs? What was the benefit of that? Anybody?
Decided to, excuse me, he decided to start the business from his home as opposed to incurring greater infrastructure costs by manufacturing out of a facility.
Definitely. Thank you, Abby. So by reconsidering, what he was looking at, it led him to a more manageable business model, lowered his risk, reduced his collateral by utilizing his own savings and taking on no debt. Because he started it out of his house, it allowed him to open faster and gain profit quicker. So make sure that your startup costs actually match your pocketbook, okay? That's a key thing. Obviously, for some of our businesses here, you're gonna have to acquire maybe debt or investment in the beginning. That's okay, but even to get that loan, to get that investment, most bankers, most investing partners are gonna make sure you have skin in the game. They don't wanna invest in you unless you've invested in yourself, right? Okay, one more question. How did Danny O'Neill alter his business concept to reduce the startup costs besides starting the business in his home? What was the other thing that he focused on doing within his model? Brooke, I'm looking at you on this one because this is kind of directly related to something we talked about in the past.
He dipped into his savings, I guess, rather than, or he allocated tasks to other people. I'm not sure.
Those are definitely things he did. What I'm looking for here is that he decided to do wholesale instead of retail. Rather than being a retailer, he decided to go up the chain. You know, by being a wholesaler, he was able to really reduce his infrastructure costs, which was key to, you know, the success he's had. Okay, well, last question. How did the new business concept still meet his personal vision? I'll just tell you. He delayed starting that retail location, right? That was the vision. He wanted the place for the people to be. And that's always a vision. I've been that guy with vision. You know, the company, one of the companies I'm involved with now, we've got 3 locations, and it's great. But none of those locations are the vision that we had. The vision we had was so much grander and so much bigger. But the reality was we just couldn't, like, the infrastructure costs were just too high. Even with investors that we did find, we just weren't willing to put all of it on the line for something that risky. So we had to restructure our vision, which was something that we didn't want to do. And it's something I don't want you guys to do. I'd rather see you change the model so you can get to that vision. So he delayed starting that retail location, began in his own basement. You know, he was able to roast, package, sell his own coffee. So he's still involved with the industry. You know, he's making his own coffee blends, gaining market share. And eventually then he opens up that brick and mortar location. So, you know, just because you may have to pivot your model in the beginning, doesn't mean you can't get to where you want to go later on down the line, right? So accurate financial information for both starting and running a business, it's just super essential. We know this. And comparing, so I find comparing startup costs or estimating your startup costs to establishing a vacation budget, they're kind of very similar. The first step, though, is just to decide where to go, right? Similarly, in business, you know, you got to have a plan. If you have not already completed it, you can establish your startup plans by answering the reality check startup planning questions in the entrepreneur manual prior to next session. Okay, so please just take a few minutes and go through those questions in your own time. Okay, so let's get back to startup costs in a little bit more detail. So startup costs, they can basically be either expenditures, which are one-time costs for capital assets or vendor deposits, or they are expenses. These are costs for operations that will continue throughout the existence of the business. Now, expenditures, why is it important to keep these two classifications separate? It's because they are recorded differently on the financial statements, and they can affect your business's financial position as well as your tax liability. So here we have some examples of some expenditures and expenses. Expenditures, you know, things like equipment, vehicles, buildings, furniture, security deposits, expenses here. There's a way bigger list in the manual as well. So take a look through it. There's some exercises to go through that also. Okay, let me start my timer here. So now we're going to do a little bit of an activity together. Activity 3A. So if you got your manual, jump over to page 106, activity 3A, called startup costs, okay? So we're gonna practice identifying costs and analyzing ways to reduce them with this activity. This activity is gonna begin with a business startup concept that answers the same questions you've answered or will answer about your business concept in that reality check startup planning in the entrepreneur manual. So what we're going to do here for this case study, you're going to do the exact same thing for your business, okay? So in groups of 3, what we're going to do is you're going to come up with a list of potential startup items and estimated costs based on the business narrative. I'll show you in a second. So you'll probably have to make some assumptions when necessary to actually complete this, because we're not looking for exact amounts here, and those things can't be determined without research. So estimates are just fine, guys. So in these groups of 3, each group is going to present their estimate to me. So the total estimate of startup costs. So if you're on page 106, we're looking at the second, I think it's the second one there, Plant Care Incorporated, okay? So I'll go over kind of the write-up there. So Plant Care Inc. provides fresh flowers, plants, and trees to businesses located in, let's say, London's downtown new corporate Pinnacle office park. The unique aspect stemming from the entrepreneur's horticulture degree and a lifelong love of plants is the source of the flowers and plants. So that's what makes them unique, source. Plant Cares own 15,000 square foot nursery and greenhouse located outside the city limits. That's what helps them source all of that. That's what makes them unique. They have their own greenhouse. Plant Care will use uniquely painted delivery vehicles and maintain a small warehouse facility near the office park with a small office and room for daily deliveries from the greenhouse. Because Plant Care is providing its own flowers, plants, and trees, the startup process will take nearly 18 months. Okay? Marketing will include providing free flower arrangements and plants to potential clients. The thing to note here is that Plant Care Inc., this example is going to help us reinforce the reduction of startup costs by changing and challenging the business concept. So we're going to do that after. Okay, so I want you guys now, we're going to go into some breakout rooms and you're going to make some estimates on that sheet there. Okay, and I'm going to give you how long? Let's see. Give you about 10 minutes or so to make these estimates. So go back through the reading and just shout out anything and put anything on your list together that you think would be one of their startup costs. So I just want to make sure our rooms are good here. We're going to use the same groups as earlier. Okay, any questions before we jump in? I think I can see everybody. All right, away you go. Good luck. If you have questions, just come back into the main room and I'll happy to answer anything. Good luck. Hi, Jenny.
Hi. Loving your gifts.
Oh, thank you.
You're welcome. That's a good one.
I like my monkey. Noticing you can't like make changes to the breakout rooms, like the settings once you like start it. Like, you have to.
Oh.
I wanted to change the timing of it, but I can't like find where to do that. It doesn't seem to let me. Oh well. Because it's stuck on 15 minutes, but I'll just close it at 10. How are you?
Oh, you know, I'm not too shabby. How are you?
Good, you know. Oh, I should probably stop the recording. All right, welcome back, everybody.
Why do I feel like that wasn't enough time?
Because it wasn't.
Okay, good.
Never enough time. There's never enough time. But I hope you got some things down on the list. So if you haven't already, I want you to start calculating. So from your group, there's how many groups do we have? We had 4 or 3? We have okay. So Steve, you're going to be group 1. Who was with you guys? So tell me what your total was for your startup costs. What was your estimate? Or
well, we spent most of our time figuring out what we thought would be included in that and very little time actually assigning value to it. But in about 15 seconds, I'm going to give you a very rough idea of what our estimate was.
Okay. Is there another group that has a number ready? Give Steve another few minutes.
See, the same thing happened to us.
Okay.
Yeah, we're in the same boat.
You didn't have enough time? You didn't have enough time? Okay. Okay. You know,
I can guess a number and throw it out there.
Let's give you 2 more minutes. I'm going to throw you back in. Add up what you think. Okay. Here we go. 2 more minutes. There we go. We changed the timing. There we go. Okay. Okay. All right. I hope that was enough time this time. Okay. So room number 3, Steve, Tracy, Rachel, Maisie. What did you get?
Okay, so the number that we came to was 325,000, and I will say included in that was the assumption that this business was sort of an extension of a already operating wholesaler for wholesaling greenhouse. So we didn't assume that we were building the greenhouse as well.
Right. I think that's a good assumption. 300, what was it? 325?
325.
Okay. Thank you, Steve. Room 2, Brooke, Cecilia, Evity. What did you come up with?
Oh gosh. We didn't get done, but what we have so far, 80,000.
80,000? Okay. Thank you.
And that's with a month of rent for the warehouse facility.
Month of rent. Okay. Room 1, Abby, Ashley, Josh. What'd you guys come up with?
So we came up with around 500,000 because we were operating under the assumption that they owned or had to mortgage to obtain the nursery and to have that space. We also kind of something I brought up that may or may not factor in was the potential for the owner's degree to be a startup cost. Because if they decided to pursue the degree in order to start the business, then that could be a potential initial cost that they would have to.
Yeah, and that could be recorded as capital expenditure or intangible, potentially.
Very good insights, guys. Well, key thing to think about here is obviously we have different amounts estimated from each group, right? Oh, we lost Brittany. She's coming back in. Question is why, right? Why do we have difference? What's important to understand here, guys, you know, the numbers were really arbitrary and I forced you to do that. And you're probably like, what a jerk, he's not even using it. But driving my point home is that it's important to understand that as entrepreneurs, we all arrive at estimates through a whole bunch of different ways. You guys were all taking different considerations in. So estimates rarely actually represent our final numbers or the full numbers in detail. It's kind of showing the importance of like consulting with other people on these things, right? You're gonna miss something for sure. The other thing that comes to light here is, okay, you guys were seeing some costs in group 1, you're seeing some startup costs group 2. Now we have to think about, okay, maybe in this future scenario of this business, they need to reduce these costs. What they thought was it was gonna be 80,000. But then when they actually did it, it's looking more like 500 and their budget maybe is only 3. Just using that as an example. So what I want you guys to do now, groups, how many, go back, open up your rooms. Okay. So I want group 1 and 2, we're gonna go back in for just 3 minutes or so, maybe a little longer. Gonna brainstorm opportunities for them to reduce costs, but keep the same business concept, okay? Look at maybe leasing equipment, buying equipment, subleasing a smaller space, contracting out services versus hiring home office versus that office space, okay? Room 3, because you got a bigger group there. So that's Maisie, Rachel, Steve, Tracy. I want you to strategize ways to reduce costs, but also while modifying the business concept, okay? 5 minutes. For room 3, make sure to maintain this entrepreneur's vision. Okay, it's got to stay the same, but you're going to still modify the concept. Okay, so it can't be like way out in left field. Let's see what you guys come up with. And I think we got to put Britt back in the room. We'll do it in just a second. Okay, go to your rooms. I'll see you all very shortly. Brittany, what room were you in earlier? Were you with Abby and Ashley?
Yes.
Yes. Okay. Is it okay if I put you back in that group?
Yes, but can you send me the slides again? I'm sorry, I'm like really distracted today, and so I didn't
problem.
get a chance to download them. So I just want to reread the scenario.
Yeah, I have the link here. There you go.
Cool. Thanks.
No problem. Okay, I'm gonna pop you into the group here.
You're still recording. I don't know if that matters to you or not.
Okay. It's sharing time. How did it go, guys? The group that was doing reducing costs while keeping the same business concept. Who wants to go first?
Was that us?
I'm gonna check right now. So that was Abby, Ashley. So there was 2 groups doing that one.
Okay, good.
Brittany and Josh. Have you guys come up with it?
I'll let Abby talk because she wrote it all down.
So one of the things that we thought about was purchasing used delivery vehicles because they're going to be painted anyway.
Right.
Hiring students to reduce wage expense and negotiating bulk discounts or tiered pricing for the supplies that we're going to need a lot of, like pots, soil, seeds, things like that. And then there's a warehouse that's supposed to be near to the park location where our customers are. So possibly just using a smaller space. And there's also a need for office space. So just being mindful of the costs associated with those 2 parts of the venture.
Awesome.
And also we had leasing the greenhouse.
Yes.
Okay.
Yeah. Instead of buying it.
Yeah.
Yes.
Some big opportunities there to reduce some costs. Good brainstorming, guys. Great. Room 2, Brooke, Cecilia, Evany, what did you guys come up with? Anything different?
So we were trying to understand the vision. Is it about selling the flowers, or is it about the quality and the care of the flowers? And so we had thought about just getting another outside company when it comes to the trucks and the deliveries and all that, so we don't have to worry about insurance or anything like that. We did think about the space, just having a space like a co-working space type thing, or like having a separate space. And I had thought about also like where there's like community gardens and stuff. So this is just something we hadn't spoken about that, but I thought about community, if there's any community green spaces that they're able to utilize, so that they don't have to worry about all of the stuff that it takes to maintain, just a fee to actually be there. And for the marketing, instead of the free flowers, that is money, being able to find a way to get their existing clients to an incentive for them to do the marketing, like, a word of mouth type thing, instead of giving free flowers or something like that. So
those are all great ideas. I love that idea of outsourcing, right? Like, why start a whole separate business when you've got a current business running? So there's definitely some interesting opportunity in there to restructure and really think about how you can keep the same concept and have the same outcome, but do it in maybe a way that's going to put more money in your pocket. So great insights, both groups. Okay, room 3, Maisie, Rachel, Steve, Tracy. What did you guys come up with reducing costs while also modifying the business concept?
So we talked about a few different things. One was sort of doing like a pop-up model instead of committing to the warehouse/office space continuously, like just sort of using pop-up to kind of like bridge yourself to that down the road. Just thinking like you could save on rent, you could potentially save on employee costs as well. Maybe not doing like daily deliveries, but moving to like every other day or a few times a week. Another big thing was, and actually Ebony had already said this, like, don't just give away your product for marketing, like try to, maybe use discounts or other tools to promote yourself. But yeah, I think that was everything we had.
Awesome. Thank you everybody for sharing. It's really great insights. I think the idea here is to kind of show you how, collecting this information, it's really going to, start to reveal, okay, maybe there's some different things I haven't considered yet in my own business, right? Some changes that I could make, whether it's to my concept or whether it's to just some of my, structural and operational costs that maybe could be reduced if I start brainstorming with a group of people, right? So next, we're going to begin to collect the information to estimate the startup costs for your business. We're going to do this with a little contest, okay? You'll also consider where startup money might come from. But first, let's get into this. So what we're talking about here, we're just doing really quick, 10 minutes. We're gonna look at what type of costs you need to identify and plan for your businesses. And now I'm sure some of you have already done this, so you may have a bit of an advantage here for this little contest. So what we're gonna do, we're gonna use the Miro board again. I know it's your favorite thing. Give me a second to open up the link here. Oh my goodness. Okay, hold on. This thing won't let me click it. One sec, guys. I'm gonna pop this back in the chat. Okay. Okay, so we're gonna use the Miro board. We're just gonna split everybody into 2 teams this time. On each team, we're gonna have a recorder, a leader, and a scribe, okay? The recorders, your job, you're gonna just pick or volunteer. Recorder's job is just to write down everyone's answers during the next 6 minutes, okay? And you're basically gonna be not shouting out, but telling the recorders what your startup costs are for your individual businesses. Leaders, your role is going to be to just facilitate the brainstorming, keep it from becoming a convoluted mess. And you're also going to be the one that's going to report your answers back to me after, okay? Scribes, your role comes in after. You're going to help me create the final list of startup costs at the end. So I'm going to give you 6 minutes to list as many startup costs as you can from all your different businesses, okay?
Okay, I was just about to ask about that because I'm like, what if we have different businesses?
Yes.
Like,
that's the idea.
I don't have the dairy costs.
That's right. It's not about the amount. We're just talking about what are all your different startup costs, okay?
Okay.
So after the 6 minutes is complete, our 2 scribes are going to go onto the Miro board that I just sent you. And I'm going to rapidly call on each leader, and you're going to alternate team 1, team 2. You're going to say a startup cost item for the scribe to write in the Miro board on the sticky note that you see there. You've already opened it. We'll go to it in a sec. And then the leader needs to pay attention. You need to be watching the screen. And as you're producing the costs from the list, you should cross off suggestions offered by the other team. So if you screw up and you say the same thing someone else already has, it's over, you lose. But the idea is the team who runs out of answers first, you're the runner-up, and the other team is the winner who has the most startup costs, okay? So 6 minutes to come up with your list. Just gonna recreate our rooms here. Okay. Jenny, we need to move you out. Hold on.
Squatters' rights.
Okay. I'll move you back out in a second. All right, guys. So 6 minutes. 1, 2, 3, go. Okay. Welcome back, everybody. I hope you had, I hope that wasn't too chaotic in a breakout room. It could probably be pretty hard to get people talking over each other, but I hope it went well. So what we're gonna do now is our leaders. Who do we got for the 2 groups? Who's leader 1, who's leader 2?
We didn't pick one.
Okay.
Like I was the recorder, but
yeah, Abby's gonna be the leader.
Okay, whoever the recorder was, you be the leader. Abby, you're 1. Who's gonna be the one for the other group?
Brooke.
Brooke?
I'll volunteer.
I think I'm a scribe.
Okay, if you wrote, then
I'll be the leader because she just sent me the list.
Okay, perfect. Thank you, Tracy, for volunteering. Okay, so what we're gonna do now is go over to the trusty Miro board. I know, okay. I hope you can get into it. Maybe we're gonna use something else next time. And then I'm gonna call back and forth between Tracy and Abby, and you're gonna tell me a startup cost from your list, okay? And one of our other people from your team needs to be writing these items onto the sticky note on the Miro board, which is located right here. These 2 big sticky notes. There's group 1 and group 2, okay? You guys can see my screen?
Who's the writer for group 1 or who's the scribe for group 1? Josh? I'll volunteer you.
What? Is this just because I volunteered you?
Yes.
Whoever can type fast. That's all we need here.
I can do my best if spelling doesn't matter.
Yeah, spelling doesn't matter. So you want to come down in here, click on it, and you're going to just literally start typing things like rent.
Are we group 1?
So yeah, you guys can be group 1.
Okay.
And then who's going to be our scribe for group 2?
It's me.
That's you, Brooke?
Yep.
Okay. All right. So Josh is typing. Brooke is typing. Who's going to be shouting out the things from the list then? Tracy? And who's the other person?
Okay, and we're going back and forth, correct?
Yeah, we're going to go one at a time.
Saying not what other people are saying. Okay, got it.
So Tracy, and who's the other individual?
Abby. Me.
Abby? Okay, right. Sorry, I'm already confusing myself here. So
there's too many roles in this game.
I know. I wrote this really late at night. So all right, you guys ready? Here we go. Tracy.
Glassware.
Okay. Abby.
Utilities.
Tracy.
Wix.
Abby.
Employee wages.
Tracy.
Vehicle insurance.
Abby.
Marketing materials.
Tracy.
Website hosting.
Ooh, that's kind of the same thing as Wix. Well,
Oh, Wix, like candle wicks.
oh, okay. Wix, got it. Good point. Okay.
So then would a domain name be separate from web hosting?
Yes, it is. Yeah.
Okay, so ours is domain.
Okay, go. Tracy.
Labels.
Abby.
Point of sale system.
Okay. Tracy.
Credit card fees.
Abby.
Oh.
Software development.
Tracy.
Product photography.
Abby.
Business interruption insurance.
Ooh.
Business cards.
Okay. Keep going. Okay, you guys got it now. Keep going back and forth.
Inventory.
Okay.
Camera.
Advisory and professional services.
Printer.
Shipping costs.
Faster.
Backgrounds.
Packaging materials.
Lighting equipment.
Merchant fees.
Microphones.
Banking fees.
Live broadcasting videography equipment.
Interest.
Childcare.
Rent.
Transporting equipment.
Taxes.
Makeup.
Gas.
Clothing.
Vehicle maintenance.
Hair.
Internet.
Backdrops.
Web design.
Props.
Registering the business.
Printing supplies.
Licensing.
Ink for the printer.
Trademarks and copyright.
Oh my goodness. I can't believe
Wax.
how long this is gone for without an overlap.
Accounting software.
Incorporating your business.
Importing duties.
Law services.
Brokerage fees.
Growth development.
Phone bills.
Business plan.
Equipment.
Logo marketing.
Installation and commission for equipment.
I don't.
Have more?
Lawyer fees.
Wait, can you say mine again? I forget what you said.
It's install and commission for equipment.
Contracts.
Leasehold improvement.
What? Leasehold?
Shipping. I don't know if we have shipping services.
I said
I think
shipping earlier.
You did, yes.
Okay.
Yeah, there
Storage
it is.
equipment like
Okay.
shelving. But
Holy moly.
That's-
Still had more.
Those good lists, guys. Lots of people between all of you. This is crazy.
That was so amazing. I thought we were gonna go on for like till 4 o'clock.
I thought it was gonna take 2 minutes before we'd have like some serious overlap, but you guys brainstormed like crazy. There's a lot of stuff. That's a great job, everybody. Good job. I think what we can see here is, between all your companies, there is a massive amount of startup costs to consider. Some businesses more than others. I'm looking at Steve and Janan here. Obviously, there is a lot of startup costs for them that are unique to their industry. But that being said, please take some time to talk to each other more like this to figure out, okay, are there things that might be unforeseen in my projections and in my lists? Okay, things you didn't consider. There's a whole different type of insurance I've never heard of in here. I'm looking on the list here.
I used to be an insurance adjuster.
Okay,
Business interruption insurance. So I don't know if COVID would apply because it may be considered like, not an act of God, but like something that's beyond control of the average person. But there is a specific insurance that, like, if there's a fire and you can't open, then you have something, a business interruption insurance that will cover the cost of paying wages and maintaining the business, even though you can't physically be open.
Right. I actually have heard of that. I just heard it called something different.
Ah, okay.
Abby, Abby is a wellspring of knowledge here, guys. Things that, she's throwing out gems here that you might want to know about. So between being an insurance adjuster and an accountant, that's some serious knowledge that you have there.
I've lived a life.
Secret weapon to our group here. Thank you, Abby.
No
awesome.
problem.
Okay. So we are going to now I'm just going to quickly go over the action steps that are part of the homework to be completed whenever you do eventually complete it. I just want to point out that, remember, just because we're covering this stuff in succession does not mean that it needs to be completed. What I do recommend, though, is you at least keep up with the readings. The action steps you can always come back to afterwards. I forget which slide I mentioned it in. It's later, but basically after the end of next week, there's 4 weeks with not a single action step. So after Thursday next week, you're gonna have 4 weeks where it's just gonna be all guest lecturers talking about different topics and giving you kind of their professional knowledge. So there will be no more things like this until we get to about June 27th afterward, okay? So if you're feeling like, oh my God, it's been a lot, don't worry, it will ease up after next week, okay? So in the action step, the first one is obviously we just practice it, estimating your startup costs. That's action step 3.1. So obviously you might have a little frustration that perhaps maybe you were in that group session and you weren't able to, come up with some startup costs. That's okay. Maybe you don't have any, and that's awesome. But if you need help, we're always here, okay? So what you're going to do here is just estimate expenditures and expenses, things we covered earlier, the difference between the two. And that, if you've done the reality check startup planning on page 95, you'll already have kind of discovered and started estimating what your expenses and expenditures are. You're going to then record your startup costs in the startup cost matrix that you would see here, okay? So you're going to use that matrix on page 108 to capture the startup items and money needed. And be sure to include all costs you expect to incur only during startup phase. For those of you already in business, direct it more towards your next stage of growth phase, okay? So research your estimates. So you got to know all of the costs and amounts. Make sure they're accurate in this matrix. We're not looking for we're not looking for estimates here. In the end, we want to make sure that you've done the research. So you can estimate it when you first go through it, but you need to go back, revisit it, and make sure it is accurate, okay? So fill out each blank next to the estimated amount with possible research sources. So as you can see here, if there's an estimated amount you're not sure about, put a research source, do a little Googling, ask Abby, because she seems to know everything. And she might be able to direct you to where you need to go to find out the cost of such things. Then lastly, you have to prove the accuracy of your estimates. So the final step is to complete the matrix, is to contact the research sources and prove that accuracy by following up, okay? So your final estimates will be entered into the financial template when you write the financial plan for your business in modules 9 and 10 that we will be doing later on in June, okay? There's also a financial facts worksheet on pages 128 to 134. You will use these worksheets to collect financial information to enter into the financial templates that you will need in modules 9 and 10. So we will start using these worksheets in the next module, so tomorrow, to collect financial information for each stage of the planning process, okay? So you'll see that at the end of the reading. It's the very last things there, page 128 to 134. Action step 3.3. So this is all about considering your potential funding sources. So at this point, we're assuming you've had an idea of the amounts you're going to estimate for your startup costs. So this is where this action step comes in, which is helping determine potential sources for those funds. Most businesses seek funding at some stage of operation. So it's time you begin thinking now about how much money you may need and when you may need it. So action step 3.3 helps you identify a list of potential sources of financing for startup and ongoing money needs to help you throughout the planning process. So you're going to fill out the potential funding sources grid using the steps that we see here. So this is the funding grid. It's pretty easy to follow here. So we have our sources of funding on the left. There's going to be lots of things for you guys to include in here that are unique to you. You have the estimated amount that you might need. So for startups here, or people who are just past the startup phase, this list could look a little bit different. You're going to list the estimated amount, whether or not it is going to be equity or debt financing. So are you giving away part of your company, or are you taking on debt and interest to incur the funding? And then the action needed. So the action needed, this is where you, the next step, you got to do more research. You got to identify contacts. Do you need to compare sources? So that's what that's all about. So we use this form throughout the program. So it's important that you fill it out. You got to update this form as information is made available to you. So, you may meet someone from Liberal Financial or BC that gets you a lead to potential grant program. Make sure you're putting that in there. So in module 9, you will make funding decisions based on this information for your completed financial projections, okay? Action step 3.2. So the next two action steps, 3.2 and 3.4, I believe that's right. I'm sure, yeah, that's 3.3, okay. These give you the information that you need to complete the business concept analysis phase of our program. So this is where you're making considerations of change to your concept, to your model. And after this, we start to prepare starting the business plan phase of the program. So throughout the first 3 modules, you've analyzed the business concept from 3 perspectives we talked about at the beginning. How well the business concept matches or helps you reach your personal and professional goals. Second criteria is whether the business concept represents a marketing opportunity for your market research. The third is how well the business concept will help you meet your financial goals. In each module, one of the 3 screening checklists that's always at the end of the reading helps you examine your business concept and decide if it passes your criteria. So action step 3.2, which is evaluate my business concept against my financial goals. This one guides you as you screen your business concept for financial feasibility. Now, additional information might be needed depending on the questions that you see there. It might be required to complete some of the questions so that the results will actually be meaningful to you. And that's okay. You can just skip past the question and come back to it later, or skip it if it is completely irrelevant. The final action step, which is action step 3.4, which is complete the business concept analysis. This gives you a comprehensive tool that you use to evaluate your concept before you begin working on your business plan. Now, thing of note here is that the checklist that you see here in action step 3.4, it's got the same criteria that you completed in each of our earlier modules that we already covered. But it now combines the criteria from the previous 3 into an overall business concept evaluation tool. So you have to remember to come back and repeat this action step each time you make a significant change to your business model to make sure that it still passes your personal, professional, and financial goals. Passing this screening is kind of your green light to continue along with the business planning process. Keep these results in perspective. Passing does not guarantee that your business will be successful. Rather, it tells you your business concept is feasible and that additional planning is appropriate. As you conduct further research, you gather more information, you apply it to your business concept, you'll be in a better position to keep gauging that feasibility with your company. After you complete the business plan, you'll be in a great position to decide what's next for your business. Am I going to launch? Am I going to change? Am I going to pivot? Am I going to grow over here? So it's really key for both launching and planning your growth. You will need the results from action step 3.1, which is the estimating your startup costs, to actually fully complete action step 3.4. So it helps you screen that financial feasibility of your business concept. So if you have not done so, make sure you go back and do that first. So this is the thing you'll need to do, is review your personal financial goals. So you got to take a minute first before you jump into these action steps to review your personal goals worksheet from the reality check at the beginning of the reading. So make any changes you feel are necessary based on the knowledge you gained today to adequately define what financial success means to each of you. And then this is kind of the checklist that you're going through, okay? Now, I think there were some people who had some trouble with this last time around the identifying non-negotiable criteria, because that's one of the steps in here. So you read the criteria in the first column that you see here, okay? And it goes through personal financial goals and then 4 other criteria as well. So you read the first column of the chart. So personal financial goals, and the other one, startup criteria, profitability criteria, and lastly, cash flow criteria. Some of this criteria relates, directly to your own personal goals, such as startup costs. Others relate to your business's ability to be just financially feasible. So check the box in the corner here, only if it is a criteria that's super important to your personal financial success. That's when we check this off, okay? For example, if generating a personal salary, like Erika was saying today, is important to you, it's a non-negotiable, then we check that off, okay? The check indicates that this criteria cannot be compromised. Some essential criteria based on your answers, if you go back and you do the personal goals worksheet that I just showed you guys here, things that you're looking for in these questions that are actually asked here is how much are you willing to invest in the business? How much of your investment will come from savings or from borrowing? What salary do you require or want? Those will help, kind of direct your answers in here as well. Then you basically rate how well the concept matches your personal financial goals by scoring it. You identify the level your business concept meets your goals using the scale of 1 to 5 that you see here, okay? So it does not meet my financial goal or meets my financial goal perfectly over here, okay? If the criterion does not apply, just skip it and then circle the numbered response to each lettered criterion statement that best describes your concept. So you'll just circle one, okay? Lastly, on page 114, there's a write-up section, okay? You're going to evaluate with a write-up of how well your business concept matches your personal financial goals. So pay close attention to whether or not those items that you marked or checked as non-negotiables, if they receive a high score or not. If not, think to yourself, is there a way that my business concept can be altered to improve its ability to meet these essential criteria? If an adjustment cannot be made, you have to ask yourself, should you continue to pursue this business concept or search for a pivot or a change? And then you're just going to summarize those results in the write-up on page 114. So a lot of people might be asking, why is the same material repeated and combined into a single checklist? The reason we do this is that developing and testing your business for feasibility, it's an iterative process, okay? We have to keep doing this all the time. As you gather more information, you learn more about your business concept, you'll be making changes and will need to reevaluate your revised concept. What is the value of doing this and discovering serious concerns with your business concept? Well, you can modify your business, you can seek another opportunity, you can prevent a doomed venture from being started. That is why we do this. That's why this is important, okay? The last action step, sorry, you don't need to do this part. We're already talking about that part. Yes, okay. So that's it. Time to wrap it up. Time to summarize. So what did we learn today? Well, first we learned that setting financial goals includes analyzing and planning for sufficient startup funds for profitability and cash flow. We learned that effectively estimating startup costs by obtaining accurate, timely information, it's super critical and to making your venture successful during startup phases. We learned that understanding key financial concepts affects your overall entrepreneurial success. We learned that the final business concept statement should match your personal vision, your market needs, and also your financial goals. We also learned that screening tools can make the business concept assessment process easier. And lastly, financial feasibility is definitely going to continue to be tested throughout the program once we get to modules 9 and 10 and during our business plan competition, okay? So this module concludes the concept analysis portion of the program with this overall evaluation of your business, okay? This evaluation is going to help you determine if your next step should be to use or modify your business concept, continue the business planning process, and write your business plan. In our next module, you'll learn what goes into an effective business plan and begin the planning process with a closer look at your products and your services in detail, okay? So a little action step review. Remember, the more accurately you can estimate costs in these action steps in this module, the better your feasibility screening and your projections on the financial statements in later modules will be. So this is what you're to complete for action steps around this day: 3.1, 3.2, 3.3, and 3.4. And then we have a reading for tomorrow, which is planning the product and service. So I don't expect any of you to have completed these action steps before tomorrow. If you want to get into them and get started, please do, and definitely go through the reality checks from today. So if you're lacking in financial knowledge, definitely make sure you go and read through all of today's reading, because it'll kind of get you started and make you feel a little bit more comfortable about what we talked about today. But yeah, don't expect you to have completed any of these. Just at least take a peek at them, and then definitely peruse some of the readings for tomorrow around planning the product and service. All right, and with that, I know that some of you may be feeling that the first few weeks, again, had a lot, but we did do this to you so that you'll have lots of time to work on all these action steps prior to the business plan that needs to be delivered in the contest, okay? So that being said, again, after next Thursday, there's gonna be, there won't be any more new action steps until June 23rd. So if you feel behind, you'll have a lot of time to catch up, so please do not worry. We do not expect you to have completed all these action steps day by day. And that's pretty much it. That sums it up for me. Is there any questions that you guys have?
I have a question.
Yeah,
So
go ahead, Abby.
So for today, we have to do a feedback survey for Erika, but then do we do one for you too?
I appreciate if you guys can do the ones for me. Like every time I do like a longer talk, if you don't mind doing one for me, just let me know how you're doing. Like some of this material is new to the program, so it just gives me feedback on like what's working, what's not, so that we can make changes. So I know it's kind of awkward to maybe do one on me, so if you don't feel like you want to do it, I won't hold it against you either.
Okay, thanks.
Tracy?
I was just wondering, like, are we gonna go over like how to organize the financial aspects of the business?
Yes. So once we get into the financial plan section, yeah, you're each going to get a financial template that we're going to use. For those of you who are a little unfamiliar with spreadsheets and things like that, we've got a template for everybody that we're all going to use. And if you've got your own, use your own as well. And then we'll go through those in detail. You'll start actually plugging your numbers in, and the template we use is already pre-programmed as well. So yes, we will be doing that.
Awesome. Thank you so much.
You're welcome, Tracy. Ebony?
Yeah, I wanted to know, is it possible to outsource this part of Leap-In? And I'm well, I take as much as I can, but for the most part, like I don't want to be doing a lot. Like I'm willing to put that as an expense within my business to once I like one of the big basic expenses to be able to get someone to help out with that. Like I like the market research aspect of it, seeing if it's feasible, obviously knowing what's coming in, what you need to start. But then after that, is this business information that all entrepreneurs should know, or is this something that you can outsource?
Can I clarify something with you? Are you specifically talking about outsourcing, understanding your finances? What do you mean by that? Is that what you mean? You want to outsource like this complete?
No, okay. I know that I'm going to go through this and I'm going to try my best to understand it as much as I can.
Yes.
But when I go into now operating as a business, and now this is something that I have to like maintain and update and take note and all this kind of stuff, can I just not deal with it?
Well, you can have a bookkeeper who can help, but you're definitely going to have to set yourself up to make sure you're collecting the right numbers and keeping record, and using a tool like QuickBooks or other financial dashboards that can help gather that information and help you present it in the proper way to your bookkeeper and accountant.
So they won't do that.
Yeah, like a bookkeeper will, be someone you would check in on a monthly basis, your accountant maybe quarterly or even yearly, depending on the type of business you have. But you cannot outsource the understanding of what the numbers are telling you. Every business owner should have a solid understanding of at least the 3 sheets that we talked about today: cash flow, balance sheet, income statement. You need to know what you can learn from those. You need to understand your profitability, understand what those numbers are telling you. So it may be that you maybe need to take a course to get a little bit more literate in finances and understand those a little bit better. But that control that you get from understanding your numbers is what can sometimes, make or break growth in your business. If you ignore it for too long, it can just stagnate you, right? So having that financial knowledge gives you control. It really does. But definitely if you don't want to keep track of all this and where this number goes and where that goes, well, yeah, you can definitely outsource like the nitty gritty details, but you need to at least know how to check in on it, know where things are going, and you're going to have to work with your bookkeeper to make their life better. My girlfriend used to be a bookkeeper, and she had some nightmare clients that just did terrible record keeping, and give her just basically shoe boxes full of the carbon paper was always worn out on stuff, and so you need to at least set yourself up so the bookkeeper doesn't charge you for extra time. So there's diligence that you can have. And I'm sure Abby could pop in on that. I don't know if they talk about nightmare stories in the program.
Oh yeah, the shoebox, the shoebox full of receipts is a real thing that entrepreneurs do. And I'm like, so what am I supposed to do with this here? Like, how do you want me to decipher what this stack of receipts with an elastic band around them that you want me to understand and plug into QuickBooks? Like, I've had some experiences.
Can you suggest a course or something that, because I'm like, wait, then what if I'm not supposed to put in an elastic band?
If you go into the FOL resources, there is some just self-directed courses that I put on there through the Business Development Bank of Canada to just kind of get you started. One of them I mentioned is like a little video game kind of course that you can go through. Beyond that, yeah, Fanshawe actually has a bunch of little ones you can go through as well for like micro credentials. And then you have access to LinkedIn Learning. There's tons of stuff on LinkedIn Learning around financial knowledge too. So if anyone else here knows, financial knowledge courses, definitely post them in the resources on Discord. But yeah, there's some stuff already there to get you started, at least, Ebony.
There's one, I know of a financial literacy course. It's not specifically for entrepreneurs, but it's through McGill, and it's really helpful on just understanding basic financial literacy concepts that you'll need to know and understand to do this part. Also, there's apps that you can use to track your expenses, where you're literally like taking a picture of the receipt and it's going into the app, and so you can have that record keeping like come second nature to you after a while. So there are tools out there, definitely.
Thank you.
Thanks, Abby. Thanks, good question, Abby. Does anyone else have any other questions before we finish?
I just wanted to know if we were going to be talking about pricing at all this week. Yes.
Pricing will come in next week.
Okay.
A little bit tomorrow.
Okay.
You're
Can I just say a comment? That's my comment. Financial stuff is like crazy. Like the financial, and then like last week was marketing, and I'm like, oh my God, what am I gonna do? Oh, okay.
Well, if you need help, Tracy, we're here. Just let us know if you need some time to help you go through some of these statements in detail. Book one of the private sessions with Kelsey or I. We're here to help. Okay.
Okay. That's just what my brain does when I hear all the financial and marketing stuff. I'm like, oh God, here we go.
You do the reading today. It is like the manual we use for this. It explains it in a very much more easier to digest way than jumping into an accounting textbook. So I hope that at least it gives you a little introduction into it. So we're slowly disseminating this financial information so that you don't have to come up against a wall all at once. And for those of you, as I said, that video from the workshop from last year, that's really helpful. So everybody, Tracy, definitely take a peek at that. It might help you a little bit too with the way Phil and John go through the explanations. It might help you digest it a little easier as well.
Okay, thanks, Dave.
Can we meet quickly afterwards?
I have about 5 minutes.
Okay.
Awesome. Well, thank you everybody for coming today. I know it was a longer session today, but finance is always a longer one. We will see you at 1 o'clock tomorrow to talk about products and services. And you guys enjoy the beautiful day outside. And if anyone else wants to stick around, please do. Jenny and I will try to help you out as best we can. Bye, everyone.
Bye, everyone.